SanDisk just delivered one of the most jaw-dropping quarters in semiconductor history. Total revenue hit $6 billion, up 251% year-over-year, turning what was once a struggling flash memory division into an absolute earnings machine. Three segments drove that number. Datacenter surging 645% year-over-year to $1.5 billion. Edge exploding 295% to $3.7 billion. And consumer growing a solid 44% to $800 million. Gross profit reached $4.7 billion at a staggering 78% margin, up 56 percentage points from just 1 year ago. Operating income hit $4.1 billion, representing a 69% margin. And net income, a massive $3.6 billion, generating a 61% net margin. The most shocking metric of all is earnings per share, $23.41, obliterating Wall Street's estimate of $14.62 by more than 60%. Let's zoom back and track SanDisk's revenue journey from Q1 FY24 all the way to today. Revenue moved sideways, hovering between $1.5 and $1.9 billion through most of FY24 and FY25 before breaking out hard. It catapulted from $1.7 billion in Q3 FY25 to $3 billion in Q2 FY26, and now reaching $6 billion in Q3 FY26. The compound annual growth rates tell the full story. Consumer at 20.2%, Edge at 68.3%, and Datacenter at an absolutely mind-blowing 481.4%. The spin-off from Western Digital was the structural unlock. Combined with the NAND pricing boom, where average selling prices shot up over 100% year-over-year, this company poured rocket fuel on its top-line engine. This is where the AI thesis comes alive across 4 battlegrounds. Datacenter is the absolute growth engine, generating $1.467 billion this quarter, up 233% quarter-over-quarter and 645% year-over-year. This is fueled by insatiable AI server demand and 128 terabyte Stargate SSDs feeding the world's largest hyperscale clusters. Edge, covering PC and mobile, brought in $3.663 billion, up 118% quarter-over-quarter as AI PCs and smartphones demand higher capacity premium storage. Consumer delivered $820 million, which is a seasonal dip of 10% quarter-over-quarter, but still up 20% year-over-year, providing a stable brand foundation. Corporately, SanDisk posted a 78.4% gross margin on nearly $6 billion in revenue. They have a $42 billion remaining performance obligation backed by $11 billion in firm financial guarantees, zero debt, $3.74 billion in cash, and a $6 billion share buyback program already in motion. Now, how does SanDisk stack up against the titans of memory? SanDisk holds 13% market share, generating $5.95 billion in NAND revenue at a sector-leading 78.4% gross margin. Their $42 billion contracted backlog with 5 major strategic agreements underpins a forward visibility that rivals simply cannot match. Micron, also at 13% market share, generates $5 billion in NAND revenue with a 74.4% gross margin, but they are burning massive capital to aggressively scale HBM and high-density NAND for AI servers. Samsung dominates the volume game with 27% share and $13.4 billion in NAND revenue. But they are battling severe V9 NAND yield issues that have crushed their margin to 61.2% and handed SanDisk a massive opening. Finally, SK Hynix commands 22% with $8.1 billion in NAND revenue and a 79.3% margin. But their laser focus on NVIDIA's HBM demands leaves the highly lucrative enterprise NAND vault wide open. Pure-play NAND focus, semi-fabless efficiency, and a contracted backlog that is SanDisk's structural edge. For structural pillars are converging to make SanDisk virtually unassailable. First is financial independence. The February 21st, 2026 spin-off from Western Digital created a pure-play powerhouse with zero debt and $3.7 billion in net cash. S&P Wink with tongue sticking out Global just upgraded SanDisk's credit rating to BB+, enhancing financial leverage and signaling elite institutional confidence. Second are AI energy dynamics. Enterprise SSDs consume 80% less power per terabyte versus traditional hard drives. With hyperscale data centers slamming against grid capacity limits across North Virginia, Dublin, and Singapore, that energy advantage makes SanDisk's premium pricing not just justified, but mandatory. Third is the core technology arsenal. BiCS8CBA is a 218-layer NAND chip with CMOS directly bonded to the array, delivering the world's highest bit density while eliminating the thermal interference of legacy architectures. Paired with the SanDisk design Stargate internal controller replacing third-party silicon, this enables faster speeds, cooler thermal operation, and dramatically better cost-per-bit economics under sustained AI workloads. Fourth is market strategy. Samsung's V9 yield struggles open a gap, and SanDisk walks straight through it. With SK Hynix locked into NVIDIA's HBM supply chain, enterprise NAND is left to SanDisk. Furthermore, the Kioxia Semi-Fab's joint venture delivers massive manufacturing scale without mega-fab capital intensity. This is not just competition, this is market architecture. Now let's look at where SanDisk is heading by 2030, and the roadmap is nothing short of revolutionary. High Bandwidth Flash, or HBF, is SanDisk's breakthrough for the AI inference era. Built on 16-layer 3D stacking at 512 gigabytes per block, it delivers 1.6 terabytes per second of read bandwidth, matching HBM in throughput while providing 8 to 16 times the storage capacity at comparable production costs. This market is projected to generate $2 to $3 billion in annual revenue by 2027, and the father of HBM himself has stated that HBF demand will surpass HBM entirely by 2038. The density roadmap accelerates relentlessly. BiCS9 at 300-plus layers is already sampling, and BiCS10 at 332 layers arrives in 2026 to 2027. SSDs scale from 256 terabytes in 2026 to 512 terabytes in 2027, and the 1 petabyte barrier falls between 2028 and 2030. For Edge AI, the Optimus GX Pro reaches 14,900 megabytes per second on PCIe Gen 5, while the Nintendo Switch 2 gets exclusive microSD Express partnerships. Automotive and NAND chips will operate at plus 105 degrees Celsius for the robotaxi era. Geopolitically, SanDisk is fortifying its supply chain by exiting Shanghai packaging, cementing Japan's K2 fab through the Kioxia alliance extended to 2034, and shifting secondary assembly to Malaysia, Thailand, and Vietnam. This is a supply chain engineered for the next decade of AI dominance. Behind this massive margin expansion is extraordinary cost discipline. Tracking operating expenses from Q3 FY23 through Q3 FY26, both research and development, as well as selling, general, and administrative expenses, show highly controlled, steady growth even as revenue exploded. In Q3 FY26, research and development landed at $337 million, up 18.2% year over year. Selling, general, and administrative came in at $161 million, up 15.8%. Total operating expenses represent less than 10% of the $6 billion revenue base. SanDisk is converting nearly every incremental revenue dollar directly into operating profit, demonstrating operating leverage in its purest, most powerful form. The net income chart tells the most dramatic turnaround story in recent semiconductor history. Through Q3 FY23 to Q3 FY25, SanDisk bled losses, with revenues flat around $1.3 to $1.9 billion, and net margins swinging between negative 38 and negative 42%. Then came Q3 FY25, the darkest quarter, featuring a single-period loss of $1.9 billion and a negative 114% net margin. The reversal was swift and violent. Q4 FY25 reached near break-even, and Q1 and Q2 FY26 pushed firmly in a positive territory at 5 and 27%. Q3 FY26 delivered the knockout blow: $6 billion in revenue, $3.6 billion in net income, and a 61% net margin. From its worst loss to record profit in exactly 4 quarters. That is what an AI-driven supply supercycle looks like. Let's look at where analysts see SanDisk headed. Q3 FY26 changed everything, reporting $6 billion against a $4.7 billion estimate, a massive 28% beat. Forward estimates now show a steep staircase to scale, peaking at an estimated $10.8 billion by Q2 FY27. This explosive trajectory is heavily supported by recent market intelligence, which projects the global NAND flash market to surge past $110 billion by 2032, expanding at a staggering 23.8% compound annual growth rate. This hypergrowth is driven entirely by the hyperscale AI storage boom. SanDisk is perfectly positioned to capture this massive macro tailwind. The earnings per share trajectory is equally extraordinary. After accelerating to $6.20 in Q2, Q3 FY26 detonated with $23.41, an incredible 60% beat over the Wall Street consensus. Moving forward, the earnings power compounds, with Q2 FY27 peaking at an estimated $43.79. Recent market intelligence from Gartner confirms that deeper NAND supply shortages and surging hyperscale demand for enterprise SSDs to meet AI storage needs are fueling strong price increases across the board. As these supply constraints persist, SanDisk's absolute pricing power will continue to drive this unprecedented EPS hypergrowth. Forget the rearview mirror. Wall Street is already pricing in the next decade. SanDisk has gone completely parabolic, violently ripping past the $1,400 mark. And the catalyst is undeniable. A staggering $38 billion hyperscaler CapEx tidal wave is hitting the market, setting the global NAND sector on a collision course with a $140 billion valuation by 2034. When capital moves at this scale, the institutional consensus speaks volumes. Out of 26 Wall Street heavyweights, 17 are slamming the strong buy button. The number of strong sells? Absolute zero. The average target safely clears $1,560. But the Ultra Bulls are smelling blood in the water, hunting a massive $2,590 maximum, an 84% premium. Even the worst-case bear floor is heavily armored at $1,000. But here is the reality check. Nothing goes up in a straight line. After a near-vertical launch, this stock is technically red-hot. A short-term shakeout as early buyers lock in profits isn't just possible, it's highly probable. Yet the long-term signal cuts right through the noise. The AI storage supercycle is an unstoppable force, and SanDisk is the undisputed engine driving it. The views expressed in this video reflect publicly available information and analyst research at the time of publication. All data is sourced from SanDisk's official earnings releases, SEC filings, and third-party analyst reports. This content is for informational purposes only and does not constitute investment advice. If this breakdown gave you the edge, hit like and subscribe. See you on the next one.